Hey, what's up, guys? Hope everybody's having a solid week. Lots of opportunity in the market, puts, calls, all across the board, everywhere. Some trends are breaking, and uh, lots of good day trades in between. Lots of good patterns. AMD's just been rocking. Apple's been solid too. BA's in this like wedge right now in this 4 hour time frame, so kind of waiting on that right now too. And this market is just literally up and down, just kind of playing in this nice little range, which is awesome. Because whenever we break out our range, it'll just mean that we're just going to keep trending, and the market needs some healthy patterns in between, some healthy pullbacks. So nothing to be too afraid of. But with that said, like I hope everybody's just having a solid week, and hopefully we all end up on the green note at the end of the month. You want to end up with some good profits, lock some in. And if you got to pay yourself too for Christmas, pay yourself for Christmas, have a little fun. Maybe buy somebody, a good gift or something. Buy somebody some shares or something. I don't know. Do something good. But anyways, so I just wanted to make a quick breakdown on HD on Home Depot. Kind of just wanted to go over it, give a few thoughts on this specific ticker and the price point that it's at right now, the perspective that I have on a fundamental basis, and let's just look at this chart and let's look at some contracts. Keep it simple, nothing too crazy. So as a lot of you guys already know, I like to buy at demand zones, and I like to sell at supply zones. And usually you find those on the 4 hour time frames. For me, that's where I enter and exit. The weekly time frames as well. Those are solid ones because they have more strength, and they have more value because when you want to buy at a weekly support, it's because you're giving yourself time, and sometimes a naked option is not always the best, but something like a strategy with playing with spreads or maybe buying a couple shares makes better sense, and it's a safer entry because a naked option will probably burn and kill you with all the theta that it has, especially if it decides to go sideways, and then you're basically screwed on your position. Even though it ends up trending up, you will still get screwed on the theta part. So that's something for you guys to go check out on the type of strategy that you would like to buy on these weekly time frames or even the monthly time frames. But like I said in the last video, it's something that I like to do. I like to buy in these demand zones, and it just makes sense for me, okay? Because your stop loss is right below. Same with the supply zone. If we end up breaking the supply zone, which would be the top, then your stop loss is like right below. So you want to buy the breakout and use that same level as your stop loss. So the trade just has to make sense for you guys, of course. And all I'm trying to do is trying to just give a simple opinion and just my thought process on HD. So we're gonna go over that right now. So looking at HD, I'm looking at the weekly time frame. 5 years. It's just as far as I go. I really don't care what happens afterwards, because when you go too far, like, it's kind of irrelevant, because back in those days, back in a few years ago, it's not the same market. Okay, this market is full of volatility, and it's just like driven by news most of the time. So the market is just so different. It's not the same. You have a lot of new traders coming in with the Robinhood traders that just buy stock, and they're making tons of money, and they don't even know why or how, but they're green. So there's tons of stuff out there, and it's just a whole new world. So it's kind of irrelevant to try to look at all those other crazy time frames, right? So here you guys just see me just chart HD real quick. So I just kind of found just some simple support right here, kind of just found a little pattern. So it looks like this was a COVID thing, right? So the trend is up. All right, this is COVID here, so it's not a big issue. But what caught my attention here is the fact that we trended up, right? We had this V-shaped recovery in the market, and HD was one of them that excelled through this whole process, and it recovered fairly fast. So if you ask me, like, this is literally a nice V-shaped recovery with a small pullback right here. So huge sell-off, and then just a bullish candle right here. Like, I don't even know why I missed this. I guess I just wasn't trading HD when it was that low. We are looking at those FANG stocks and stuff, but uh, yeah, I guess we missed this. Anyways, we created a little pennant right here, a nice squeeze, which broke to the top side. And then now what's happening with HD, you're actually building a demand zone right here with the supply zone up top. You can clearly see it right there. Okay, I have my alerts at, what is this? Let me just get a little closer, find that trend. So 286.30. If you want to get specific, you can even use 286. Okay, all the way to the 290.84 or 291, if you like those whole numbers. And then I have this demand zone at 267, and you just say 263. Okay, so those are my major levels for the weekly. And just zooming out, you can kind of clearly see a nice picture, going up. And then now we have this here. So this is great. A lot of traders don't like to see this. So having these ranges is real nice because it gives you an opportunity to buy at a demand zone and sell at the next supply zone. So how we get there, that's going to depend on the market. If the market's like nice and healthy pullback and it's just trending up, then of course, the buyers will come into these stocks, into these demand zones, and just start buying stuff up. It's that simple, really. And we make it difficult because we always wait for some type of confirmation, and we always wait for this and we wait for that, and all we really got to do is literally just buy at the demand zone and stop down right below. So that's how simple I like to see it. But here, like I said, we have a demand zone, and it looks like we started to break below. Looks like we started to break below, but we're still closing inside, and we're still kind of building in here, right? So this is the weekly time frame. The volume is decent. The volume just started here for the week, so I don't expect this thing to just rise like crazy, but it does have rising volume on these red days. And the awesome part that when you see red days like this, and you see these demand zones, it's not always seller volume. Okay, you do got to realize that it's a combination of both. Okay, it's a combination of people shorting and taking profit. At the same time, it's a combination of people coming in and buying the stock at the bottom level. So it's a little bit of both. It's not just pure selling volume, because if you notice here, the next candle was not red. It actually ended up building a wick, so it looked red maybe for a couple of days, and then got bought up right again. So the volume is still kind of the same right here, and then right here is still like equal volume, and yet we're still green. We're still inside this demand zone. So all of the trade looks valid. So HD is a good company. Like I said earlier, it was like literally like this bullish candle right here, and everything's just green. Like there's only one little pullback, and then we have a pattern. So this is a healthy trend. Okay, I just can't believe I missed that full V-shaped recovery, but again, it's all good. There's tons of opportunity, and I had the opportunity to trade this specific stock, which was awesome. I actually traded here all the way up to this like 285 level, I believe it was. Yeah, somewhere in here. But anyways, that's kind of how I'm viewing HD. The chart looks good, the demand zone looks good. We have earnings on 223.21. So there's lots of potential for HD. And just another stock to take note of is low. Look at low. It's the same thing, right? So straight V-shaped recovery. Here we just have a little retest of the recent high, and then we keep trending up, and then right here we ended up squeezing somewhere in there, and then now we're just kind of trending up again. So we found some support right here. So again, I'm just kind of looking at, the related sector, HD and lows. So that's all I basically did. So the charts on both ends look pretty decent. Uh, but I honestly, I think HD has more of the risk to reward, because let's just say you do enter, let's just say we do enter right here at like this 260, 268. Okay, the stop loss is 263.50, right? So let's go at lows. Let's say we do enter HD at 163. Your stop loss is way down here at this 149.80. So that is a huge stop loss. So the reward is pretty decent for those, right? Because your target would be this top, which is this like 178 and 180, versus HD, right? We enter at 268, and our take profit is like this 286, 290. So the reward for HD and the risk is a lot better on HD. Okay, there is some news, not some news, some upgrades that it had of like 304 and 312. So the targets for HD for um, the upgrades, they're actually in the 300s. So if this thing has, some upgrades of 300, well then I honestly think that this is like a nice buy area with your risk to reward and matching it. Okay, I know the market's a little shaky, and it's a little more difficult to buy some of these swings because it's literally like it's just up and down right now, and it's a little too hectic. But like I said, the market sentiment is so different from when it was a few years ago, and it's a lot of volatility. But again, you still come in with the plan, you still come in with the risk to reward that makes sense, and you stick to it. Okay, so HD, this is why I like HD. I think it has tons of potential, and like I said, if you want to buy some spreads, by all means, go do your own homework on that. If you want to buy some shares here, your stop loss is still 263. Okay, so I don't want any candle bodies below this candle body here. Okay, because once we start building down on the bottom, then we're definitely going to just keep trending down. Okay, and that's not something that I would love to see. But let's get on a smaller time frame. The smaller time frame for me is going to be the 180, the 4-hour chart. So here, this is where all the price action is happening, and this is what I like. This is what the demand zones are for me, where there's price action, where there's bouncing, where there's some candle bodies inside, where there's some accumulation, some little ranges. That is a demand zone for me and in a stock. Okay, so here you can kind of clearly see there is a lot of price action going on. So all this price action, anybody who bought HD here ended up buying it here, 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 and now right here we actually broke to the bottom. So this actually trend down, and this is where, now that I'm talking about it, kind of looks similar to this area where you're kind of trying to build a base here. Okay, so let's just get a little closer and let's just kind of see what it's doing. And what I like about this is I played a call here and actually took profit at like 268. I had a 265. So here you have a nice little range. Okay, so you have a base building at a demand zone. When you have a base building at a demand zone, it's going to give you um, uh, a nice solid foundation for it to hold and for it to create some patterns inside or above it, and for it to break out and give me a reason to break out. And this is something I talk about in every single video that I make, that I need a reason, to take this up. And the reason would be the pattern, the break of pattern. Okay, so in this case, it's the break of the range. Okay, and let this just keep rolling up. Let it go. The thing about it is that it's more of a slower mover. It's not like one of those stocks that you can kind of day trade on a daily basis. This one you got to buy the dip and let it do its thing. And sometimes that's the difficult part about it. But again, it gives some nice moves if you're patient enough to ride this one out. Okay. Again, here we have some more price action, right? Here you have the price action. So something that I like is the meat of the bone. So right here. So what I want to happen here, okay, because we're looking at the 4 hour time frame, we're looking at this demand zone, but we're looking for this demand zone to actually hold, build, and trend. Okay, and sometimes it takes, it takes a few days. It can take up to 2 weeks for something like this to happen. I mean, you guys see Netflix, Amazon, Microsoft. When you see these stocks ranging, like they range for a good while, and we want to wait for those range breakouts. Okay, so that's why I said earlier that a naked option, the theta will burn you pretty bad if you grab a long call. You really go negative real fast. So that's just something that you gotta uh, be able to handle, be able to manage, and be comfortable trading naked contracts. Okay, so I'll take this off. I really don't care about that right now. So my goal, what I see value in as a trader, as somebody who wants to invest in HD for like a good little while, the trade for me makes sense. Okay, so I want to be able to buy the dip somewhere in here, and I want to grab the top. So this 266. Now, I don't know if we're gonna get a pullback tomorrow. Like I really don't know, but all I can do is set my alerts. Okay, this 266 and 266.50. It's kind of where I have my alerts at, because that is where I want to buy the dip at, and that is where I want to see maybe like a nice red candle here, and then the next few candles just start going green and trending up. Okay, that's all I want to see. Now, if this thing goes tomorrow, then for sure I'll take it over the high, which would be your 268.20. 268.50 would be my next entry. So that is where I have my alerts at. I'll set it now. So that's where I kind of want to go long. 270 would kind of be your ideal target, just due to the fact that it's a whole number. Okay, and then 272, 274, 278. So you just want to be able to trail this position, of course. Okay, so that's just kind of my thought process on HD. And let's look at some contracts. Some of you guys have big accounts, some of you have small accounts. How long do you plan on holding? Are you planning on holding for the next 15 days by the end of the month? Are you planning on holding for maybe 2 to 3 months? So that's going to depend on you as a trader, because the contracts will vary. And again, your strategy is going to depend on what you want to do. Okay, it's not about what I'm going to do. It's not about what contract I plan on getting into. It's all about you. Okay, and that's kind of the one thing that we've been talking about is strategies, the past 2 videos. And then now I'm just showing you exactly what I'm looking at, how I'm looking at it, in order to make a nice long swing position, because it makes sense to me. Okay, now if there's something you guys see that you might want to point out, by all means tag me in the chats and show me a chart and show me what you think, or maybe something that I missed. Okay, because I'm not going to get everything. Okay, that's how we trade together as a team, right? I sure hope so. All right, so look at the percentage. Even the percentage are in the 20s. So like, imagine if this were to get like like Lowe's recently started pumping, because it had some decent news. It had some news that they were doing good on a financial basis. So if they're doing good, why isn't HD? Okay, they're both in the same type of sectors, and HD is, like I said, it's a good company versus Lowe. I honestly prefer HD. So if we do get some of those like news articles and stuff, this 20% is going to increase to like 25 to 30, and the IV in the contract is actually going to increase in value. So you're actually getting in at a decent percentage IV, and it makes sense. Okay, so if you plan on holding for like 15 days or maybe 3 to 4 days, um, we are on the 15th. So January 15th would be like one of the first long contracts that I'd be looking at. Okay, so like I said, look at this 270. Okay, we're at 268 and we're at 270. Okay, so we're trying to buy it around 266. and maybe take profit around 270, 275, potentially this 280, okay? 278, yeah, 278, and yeah, about 280. Okay, so you don't have to hold it for that long, all the way to 290. Okay, you can just make a short, quick plan to be able to swing trade something like this. And the 270 is not far off. The 270 contracts are only 630, 650. So, you know, just an example, Facebook and VA, they have decent contracts. Even 2 weeks out, they're about the same price, 630, $7, $8, you know, to grab some of those in the money contracts and actually make a decent profit. So instead of day trading, you know, BA or Facebook, you know, why not grab one of these contracts that you're spending the same amount and you're risking the same amount, but yet your reward for HD is going to be a lot bigger than, you know, BA or Facebook, because BA and Facebook, it's only going to be a day trade and you're probably going to make, you know, 20 to 30% versus HD. You're looking at a greater reward with the IV being at like 25 to 20%. So the trade again makes sense. So that is my thought process behind this whole thing. So instead of me trying to grab a day trade right now, you know, with this market being a little up and down, a little crazy, I'd rather put it in this contract, you know, for 630, 650, with the hopes of getting, you know, some type of pullback tomorrow, or maybe the next couple of days, and maybe getting in to this contract. But again, don't hold account this. If you have a 1K account, I don't recommend, you know, grabbing this contract. This is like for those accounts that are over 3 to 4K. So keep in mind that. Okay, so the 270 or even the 275s are at like 420, 440. Okay, you still have room. You still have room to go up. Look at this: 1, 2, 3, 4, 5, 6. Maybe in the next 7 days, you'll be at like 275 potentially. If this thing, of course, like I said, you know, continues to roll up, then we should be looking good. But again, that is just for the short term trade, because you're on the January 15th, and that's basically into coming into the next year. Now, if you want to go a little further, you have the 19th right here. Look at the 270s. They're about 1K. Okay, so for this one, it would probably be like a 10K account, a little over 10K account for that 270 call. But again, you can look at the 280s, which is probably this. It's a little bit cheaper than the 270 January 15th. So 575 to $6, which is not bad. But look at this. The open interest on these are pretty decent. The volume is not huge, which is telling me that they're loaded up on, you know, a lot of these calls. And then over here, you can kind of see like the hedge, the 230, 225s, the little hedges are right here. So there's more open interest than there is puts. So that's just kind of how I'm viewing these contracts. And like I said, look at this one. This has 6K for the 280s. And let's just say we do get at 280 within the next 2 weeks. We're actually going to be mostly in the money, and buying here, again, risking the fact that you don't want it to go below 263. So you're risking $3, right? Let's just say we do get in at 266. Your stop loss is 263. 263 meaning below it, breaking below with volume. Okay, just because it hits 263 doesn't mean it's an automatic stop loss. It's breaking below 263 on the 4-hour time frame with volume, with the trend changing throughout the day. Okay, if you see a trend, you know, like this, like a big candle like this breaking below 263, and let's just say this was 263, and then it went something like this, and that's when you would stop out. But if we do something like right here, right, let's just say this was 263, and then the candle ended up coming back up, then you shouldn't worry. So that's the difference. When, you know, you look at these swings and you look at these 4-hour time frames, you got to look at the trend during the day. Okay, don't get scared if it, you know, pulls back a little bit and then it gets bought up. So that's the thing about grabbing those long contracts, that you got to be able to be patient, have no emotion, and just trade the plan. Okay, a trend change means when there's volume and the break of pattern on the 4-hour time frame. because that's what we're looking at. We're looking at the 4-hour time frame. We're looking at the weekly time frame, and we want this thing to push up. So again, the risk to reward is perfect, and the plan makes sense, right? So I want to be able to buy the dip at 266. Okay, 263 stop loss. Okay, if you want tighter, by all means, play it tighter. But if you're playing it tighter, then wait to get the lowest price point as possible. You don't have to get in at 266. If it breaks 266, grab it at 265.48. Grab it right here. So you don't want to go below this candle body, which is 265.62. Okay, you just wanted to just keep trending, up in this area here. Okay, all in this area. You just want some candle bodies built up inside here, and that's kind of what I'm looking for. And I'm looking for the volume to stay stable, which it is. So here you have like a nice little spike to the top. So just kind of showing me that there is buyers interested in HD, but again, you still gotta have a plan set with some alerts. So I'm gonna just start setting some of these alerts. And we're just gonna have to be patient on this one, and for sure I will definitely post it when I enter this trade. I will post the exact contract that I'm taking. When that happens, I will make that decision, but again, it's gonna be up to you guys too. You don't have to take the same contract that I do. You don't have to trade the same plan that I do. It's just something that I'm setting up that I see value in as a trader, and the way that I'm going to trade this is exactly how I'm explaining to you. I want to buy the dip around 266, and look at, I just set up all these alerts because I want to make sure I catch the run up. And then I have this I'm gonna do 265.44 or 45, break below. So I want to know if it's trending down, if it's breaking. I want to know what is going on. I'm going to keep up with some of the news that it comes with, keep up with the IV in the contracts. So I'm just going to monitor this one, and we're going to have to wait and see, because, I mean, if we start breaking down below, then that'll mean that we're not holding this demand zone, and we're probably going to come back down to this 250, 246 area. So I wouldn't want that. Again, if my alerts don't trigger for the tops, then I will never know what happened, because I will not trade the put side. You guys find those levels for the put entries if you guys want. By all means, day trade this thing. Do whatever you got to do. We're option traders, we're spread traders, we're whatever traders, right? As long as there's opportunity to make money. So again, it's up to you guys. But yeah, that's what I got for you guys. I hope this kind of makes sense for you guys, and the demand and supply zones. And then right before Christmas, I got a special surprise for you guys. So hopefully you guys wait for that. And yeah, I'll see you guys in the chat. I hope you guys enjoyed this one. And the way that I just broke it down now, you guys can also break down other tickers. So go take a look at Lyft. Go take a look at Uber. Take a look at CRM, I believe it was. And then yeah, just a couple of tickers to keep in mind. And then keep in mind the BA wedge and the new trend for Apple and AMD. So stay green. Let's end the year on a good note, guys. And let's just have some fun in the markets.